Say somebody's going to pitch someone like yourself or your firm. What mistakes do you see founders or young companies making when they're trying to get their idea across to a fund?
I just have to say one. It can't be 600 pages.
No.
It can't be 600 pages. We got to get to the point. We got to get to the point, though, over text. We got to get to the point over email. If someone sends me an 18-page email, I'm out. Yes. Like, I'm out. Yeah. You're wasting my time.
No, I believe if
Sorry,
you can't...
that's just, if I was an investor and like someone's showing me a 60,000-page email or PowerPoint, I'm out.
I mean, I feel awful even corroborating that, but it is so true. We review like hundreds of decks a week. And I don't want to say that it's important to have a warm intro, but it really does help because there's less pressure going into that conversation.
Explain what you mean by a warm intro.
If you know someone who knows an investor that would be perfect for your brand, ask for an intro instead of reaching out cold.
Ooh, I like that
if
tip.
You feel comfortable.
That's a great tip. That is a great tip.
It allows you to kind of skip the line. But Michael, to your question earlier, I think the biggest mistake that I see made is brands reaching out to funds or angels that aren't a fit for the company.
Like they don't do any research on the type of things that that a fund invests in. They just hear, oh, that's a fund that has money, and I'm just gonna
give us a granular example.
Oh my God. Well, first of all, the amount of early stage brands that reach out to RX3 is unreal. And look,
maybe explain the stages in a bit, because I think like even just like if somebody's like, what the hell are they talking about stages? Like, I think that's important.
Okay, so we look for. We say 10 million is sort of like the cutoff, the threshold in terms of what we're looking for.
From a check size or from a revenue side? Okay.
Revenue perspective. And we'll look upwards of like 50, et cetera, depending on the amount of ownership that we're looking to take. But that's sort of like growth, I would say. Earlier than that is what I'm referring to as early, but I'm talking like pre-seed.
Like somebody needs a $300,000 check or $500,000 check. It's like you guys don't write checks that small or look at businesses of that size.
We literally can't.
Yeah.
And there are opportunities, I think, that come out of, in the one-off, there will be a partnership opportunity.
Explain why you can't, because I know why you can't, but I want people, like I want to get super granular here.
Let's do it.
Yeah.
You're using my word?
Yeah, but I want to, because I think people, I don't think people, I think when they hear you, the majority of people hear like, you just can't, meaning like, oh, you can't. But no, it's like literally like you're not allowed to in that fund because of the way your fund is structured, correct?
Exactly. So actually this is perfect because we were talking off air about kind of like the economics of a fund, which I think are not very well known. So as a fund, we're not investing our own capital. We invest other people's capital. And I think that most people probably don't know that. We have LPs, limited partners. So they invest in the fund. And in exchange for taking their money, we tell them sort of like the fund thesis, and we create a mandate that is mutually agreed upon between all parties. That mandate is what dictates how we invest.
So if I come to you, if Lauryn and I come to you and we say, hey, we're going to write a check into your fund. We're trusting you with our money. We have a conversation and discuss the type of kind of things you're going to be investing in, categories, industries, et cetera, the type of check size, the type of growth stage, where a business is at. So basically, if I've agreed, hey, I'm investing in late stage, or not late stage, but growth stage businesses that are around that $10 million revenue, and they've already kind of proven that they've got some traction, that's where I think my money's going as an LP. If then later I hear that all of a sudden you're in a business that is pre-seed, writing low checks, and a business that's not, I'm like, hey, as an LP, that's not what I agreed to give you money for.
And a lot of your LPs are like football players, celebrities, sports players, influencers, correct?
Yes. Okay. I would say like 40% or so of our LPs are celebrities. So athletes, celebrities, entertainers, influencers, social media influencers. That's something I'm very passionate about kind of scaling. But yes, that 40%. The other 60% are kind of institutions or high net worth individuals. And to your point, I mean, we're not necessarily the only fund that an LP would be invested in. And I think that's something else that is a little bit gatekept, is an LP might invest in 2 growth funds and they might invest in 3 seed funds. And that's their way of sort of like mitigating risk with the later stage investing while being able to play early stage. So they're balancing their portfolio based off of the mandate that we've aligned with them on.
Yeah, makes sense. Well, I think the reason I wanted to clarify that is because back to your point, okay, so if somebody comes to you and they've done no research on RX3 and they're like, hey, I need a $500,000 check, you're like, guys,
hard.
we can't. And also like you've done no research.
It's lazy. It's lazy.
I mean, if you're looking for a partner on your business, like any kind of partner, maybe it's a co-founder, maybe it's an investor, maybe it is an influencer that you want to align with the brand in whatever way. Like you're looking for a partner, you should do your diligence on that partner so that you're coming to them with an offer that is appealing to them and satisfies your needs.
That's one thing that I really like about you. Michael doesn't even know this, but you are not lazy with your work. And I'll explain what I mean. I was on the phone with you talking about something completely different than this. And I loved what you were saying. And I was like, wow, like how can we get this part of Kira on the podcast? And I text her and I was like, can you send me some like talking points of what you would talk about? The talking points you sent me are so thoughtful. And I think that if you can approach every single area of your business like that, it really shows. Sending someone a copy and pasted email that we can tell, by the way, because it's dark purple font. Oh, like you're not going to get the result you want. You have to put thought into things and be purposeful.
I think gatekeeping is, I sometimes don't like that term, but I think in this world it's appropriate because one, I think people don't feel like they have access, right?
Yeah.
So, okay. Acknowledging first, it's a trying time and not a lot of people right now are just throwing dollars around. It's like, right, the economy is constricted. But if you are thinking about investing, most people don't even realize that they have the ability to invest in a venture fund and become an LP. And then in addition to that, they don't understand the type of funds that they're deploying against, right? And then, they hear someone like me or Lauryn talk about like, oh, I raised money for Dear Media or Lauren's run here. And they don't understand like how it happened. Yeah. It feels like it's like this insider club, but really like we started as anybody else. It was like, okay, what does it mean to raise capital? Who are the types of people you can raise capital from? What does it look like to build a presentation? How do we build some traction and get something interesting to people? And then who do you talk to? That's I think what I'm trying to accomplish a little bit from this conversation is understanding like, yeah, it's not the easiest world to break into, but it's also not the hardest if you just get a little bit educated and start to figure out like how to kind of actually go about the process.
The reason why I'm in private equity just in general, and it is probably a very rare sort of path to go from public relations to private equity. And I think the reason why I'm here is because of two things. And it's the same thing that I would like to see founders do as they raise capital, especially early capital. And the first is just like taking every day and being the best at whatever it is that you choose to do. Just be the best, create the best brand, create the best product. And truthfully, if you create the best brand and the best product and you have a moat around that brand and product, investors will seek you out. So that's one thing to be said. The second thing, though, is being curious and taking every opportunity as like, I have a visual of little strings. Strings are dropped down throughout my life and on a daily basis. And I choose how I want my life to go based off of what strings I want to pull. And that comes back to curiosity because that's what allows me to know I'm in alignment with what I want to do. Like as a founder, if you're raising capital and you're starting to see kind of little strings, maybe you got like a LinkedIn ad for a course on how to raise venture, or you follow someone on Twitter and they're talking about the sorts of things that you want to learn about. Being curious and being open to not knowing, the older we get, I feel like the less we want to be bad at something.